it's easy to follow the herd, and you'll usually be wrong. You might be right for a few days, but by the time the herd catches on, the insiders are probably already moving in the other direction. Now, this may be a little bit different this time, where the insiders aren't going to pivot and sell and to capture profits at the expense of the public. But I think what will happen more appropriately is that the public will just be shut out.
Hello, I'm Noah, the original prepper. Perhaps you've heard of my ark. Well, if you would like to be prepared, check out these 1-ounce silver Noah's Ark coins from Armenia. Right now, only $4.25 over spot. And if you get 500 of them, they come in an amazing wooden monster box. Can you believe it? We also have the 1/4 ounce Noah's Ark coins with the same beautiful design, 1/4 the size, at only $3.25 over mount. And you know what goes well on an ark in a beautiful wooden box? I'll tell you. Animals. And so we have the Canadian silver 1/2 ounce eagles and silver 1/2 ounce polar bears. Available at just $3.50 over melt. That was a lot of information, so it might be helpful to read it and hear it again.
1-ounce silver 2022 Noah's Ark coins at $4.25 over spot. 1/4 ounce silver 2022 Noah's Ark coins, $3.25 each over melt. 1/2 ounce silver Canadian polar bears and 1/2 ounce silver Canadian eagles at $3.50 each over melt. Call 1-888-81-LIBERTY. 1-888-815-4237.
Welcome back to Liberty and Finance. We're always glad to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He always joins us on Tuesdays for our weekly market update. This one is Tuesday, August 23rd, 2022. Andy, thanks for coming back on.
Great to be here, Dunnigan. Thanks for having me. Appreciate it.
We are just about unwound from the Rural Symposium on Natural Resource Investing, and I can't believe it's been about a month since we flew down there, and we're getting ready for it to begin. It just seems like almost a blink of an eye, but we've finally gotten all unwound from that. So great to see you again in this way, and it's been quite interesting seeing the gyrations in the market since we returned. And one of the things that I wanted to point out was that with the stumbling of the major stock markets, and I would like to get your feedback on this, that coming on the heels of, or in the context of that large $50 million gold and silver order that was taken by one of our brokers at Miles Franklin, that's been well publicized and talked about a lot, is we're starting to see, and I've heard this from other places as well, starting to see other large orders, maybe not that large, but much larger than typical orders in the past, coming out of the woodwork as people are taking seriously, having seen that major player make their move. Now it seems that other people of means, business owners and others, are considering it's time to make their move. On my own little tiny corner of the world, I have 2 separate clients who have approached me and said, could I be prepared to handle up to $5 million orders from them in the next short period of time? And I talked with you about one of those and said on that particular day, it would pretty much clean our shelves out of most of our sovereign minted silver coins. And if I had to deal with 2 of those in the same week or month, I don't know what we'd do exactly. And that's just one of your many brokers in one little corner of our world. So just thought if we could get your perspectives on what you think the thought processes are that are awakening in people's minds of means, having had that very significant order happen, perhaps a record order of all time on a retail basis in the U.S. here. And what it might be spelling for the near term for people who are waiting to make their move, waiting for a perfect low, waiting for that right time to make sure that they can get the physical they're looking for.
Well, let me answer that a little bit differently, and then I'll answer it the way you intend it. We are seeing a continuation of many of the things that we've talked about repetitively, namely repatriation, accumulation of metal by the big money and pulling it off of the exchanges. Last week, I believe it was last week, we're seeing, and I believe these are the others, and I'll tell you why in a minute, the others that we've talked about on your show, which are the family offices and the sovereign wealth funds that are draining the COMEX market. Last week, in one day, 41% of the physical gold bullion from the kilo vaults at the Chicago Mercantile Exchange were drained. 41% of all of the kilo bars that are held at the CME were drained. That works in one day. That works out to almost 175 million troy ounces. And what's most interesting about this withdrawal is that they weren't the typical 400-ounce London good delivery bars or the 100-ounce gold bars that the sovereigns would accumulate, that the central banks would accumulate, that even the commercial banks would accumulate. It's likely the smaller but incredibly wealthy sovereign wealth funds, family offices, private investors, the uber wealthy and the connected individuals that have suddenly decided to, once again, take massive position in physical gold. And you know, it's almost as if they know something's coming, because let's put this in perspective for a minute. The COMEX 50-day average rate of gold withdrawals just hit a new high of 131,293 ounces. And let's think about what this really means for a moment. On average, 131,293 ounces of gold, or roughly $233 million a day, have been withdrawn from the COMEX every day for the past 50 days. So, you know, you're talking 175 million ounces have been pulled off the COMEX in kilo bars. And I wonder, do these people know something is coming? I don't know. If you look at the amount of silver on COMEX, a tremendous amount has been withdrawn recently. We talked last week about 100 million ounces being drawn out of SLV in the last month. But right now, in terms of silver on the COMEX, there's only 55 million ounces left in the registered category. To put that in perspective, we've seen that much delivered off of COMEX in the last 5 months. So in theory, there's only 5 months worth of deliveries left on COMEX in the registered category, yet we were told a week before that over 200 million ounces were taken out in one day on the London Metals Exchange. So big money is taking possession of metal, and in staggering amounts. So I think whether you're talking people here in the retail space who are waking up to what rising interest rates will do to their equity portfolios, to their bond portfolios, to the real estate portfolios, or inflation does to their cash holdings, I think that you're seeing an awakening again, a gradual awakening that is continuing. We've talked a lot about this. You know, so much of this inflation has been holed up in financial assets. And if we start to see a repositioning out of these financial assets into tangibles like gold and silver, which it appears that we are, I think you're going to see a real rush to take all of these dollars that have been created over the last several years and put them in somewhere safe. It's much easier these days to make money than it is to keep it. And I think you're getting people that are beginning to realize that. And you're right. When you called me offline last week and told me that, hey, you know, I have someone that may be interested in $5 or $6 million. Yeah, that's not a problem to do that order. But what does it do to our inventory? 2 or 3 or 4 of those. It's just an acceleration of something that I've been saying on your show for a year and a half, that ultimately the market in the United States is defined by the inability to readily and easily source product. And I just want people to know, once again, I am talking, this is what I see down the road. It's not here today. We did a $50 million deal. We can do a $5 million deal. But getting these items, which I always took for granted. In fact, my biggest single concern was finding clients. Now it's the complete opposite of that. Thank God. But it's another problem. And that problem is sourcing product down the road. I believe it will be a very big problem because there's so much money out there chasing a very small amount of gold. What does that remind you of? That's price inflation. The more demand, the less supply is only going to jack prices up higher and higher and higher. And I really think that the smart guys are getting their bullion out of the warehouses now while they still can. And it always starts way up here and starts to trickle down. And you're talking the wealthiest private investors in the world are taking 175 million ounces off of COMEX. I would argue something wicked this way comes. And then it will start to transition down to the little guy, me, you, and everyone else. And we're the little guys. We're not the commercial banks. We're not the sovereign wealth funds. We're fighting for the scraps. But, you know, when you see that kind of record withdrawals happening on both COMEX, silver, and gold, backdooring out of SLV by the commercial banks, and huge exchange for physical withdrawals on the London Metals Exchange, they're pulling out all of the stops to take physical possession. And I think it will only increase as an awareness comes that the Fed is not going to do what it takes to fight inflation, and inflation is going to erode further purchasing power of people holding dollars. And if they do get tough on inflation, or God forbid the things that I've been talking about, the de-dollarization by the East, by the BRICS nations. You know, I see Alistair McLeod, someone I respect so much, just came out and said the same thing we've been talking about for a year, that the world is splitting in two, East and West. The East is a group of countries that is dominated by commodities. The West is a group of insolvent countries that is dominated by debt instruments. And so you're beginning to see this dichotomy, this fracturing of the system. And I think little by little, people are awakening to this. The people who are pulling the strings, the connected people, that's why they're massively taking withdrawals off the exchanges. That's the first salvo. The rest of us will figure it out after you see some sort of issue where the stockpiles are drained so much that it has to be talked about on the mainstream news sources, not by someone like me who spends all afternoon digging every day looking for crumbs of information that if you look hard enough, you look at it and you say, oh my God, I mean, is that really true? 175 million ounces of gold withdrawn off of COMEX in a very short period of time. I think that it's, when you're seeing over 130 million ounces a day on average being taken off of COMEX, if that doesn't crystallize everything that I've been trying to get across here, I don't know what does. This is no joke when literally you're down to 55 million ounces of registered silver on COMEX, and that's how much has been delivered in the last 5 months. But many times that was delivered off the London Metals Exchange a few weeks ago, and 4 times that amount off of SLV in the last month. So is it really that much? No, it's not. If you figure that 850 million ounces of silver are mined each year, and we only have 55 million ounces that is backing the price setting mechanism of the West, it's a joke. So the big money realizes this, and they are doing all they can to rip it off the exchanges and prepare, and it will trickle down into the mainstream, who I think will be left holding the bag, who doesn't have the ability to accumulate stuff after the big money has already, as always, positioned themselves for whatever this next move may be.
Yeah, what was that quote from your Econ 101 class about the little man rule?
Yeah, well, the little guy never wins, because the little guy always is the one who makes his or her move after the big man or the big guy has positioned themselves, and they're always late to the party. And that's why most people are never successful in investing, because they follow the herd. There's a whole school of thought, wave theory, Elliott wave, Kondratiev wave. This is all based on human emotions. And wave theory is very accurate to a degree where, human emotion is very powerful, and it's precisely the wrong thing to do in investing. But the big guy is always repositioning when other people are not even thinking about that. When gold and silver are beaten down and no one wants it, that's when they're repositioning. Ask Rick Rule. He'll tell you the biggest money he's ever made has been when buying when there's blood in the streets. He talks about publicly one of his biggest deals that he ever did. He bought, and when he bought it, it collapsed in price, but his conviction was so strong, he doubled down, and it became one of the biggest scores ever in his professional career that he made, because he understands that the only way to successfully position yourself is to do, I guess, become a contrarian. And as he often says, if you're not a contrarian, now you'll be a victim. I think that's really what he's trying to get across, is that it's easy to follow the herd, and you'll usually be wrong. You might be right for a few days, but by the time the herd catches on, the insiders are probably already moving in the other direction. Now, this may be a little bit different this time, where the insiders aren't going to pivot and sell and to capture profits at the expense of the public. But I think what will happen more appropriately is that the public will just be shut out. Look at the U.S. Mint as an example. Here again, model of inefficiency. Premiums on gold eagles going through the roof. Premiums on silver eagles going through the roof. Inability to source it easily. This is just one example that I think will continue to manifest into what is a very small pool of available supply. But in every form of investing, the huge investors are the ones closest to the information. They're the ones who make their moves when it seems counterintuitive. Yet you have to really dig to find it, because you're not going to find this information watching Fox News or reading the Wall Street Journal or any other financial newspaper. You got to dig. And in order to dig, you have to read things that'll make you want to fall asleep reading the COMEX or going to the Fed website and reading all of their nonsense. But the bottom line is it's happening. And I think it is pivotal to everything we've been talking about, this linear progression of events that all leads to de-dollarization town. And the biggest money in the world is doing that right in front of us with massive withdrawals off of the exchanges.
My gravest concern in this is the ordinary families, the ordinary Jane and Joes up and down the blocks of America. If 99.5% of people, according to Rick Rule, have no participation, no physical precious metal ownership, no participation in natural resource mining or precious metals, mining stocks and shares, that sort of thing, that inability, by the time that they do awaken to the necessity of owning something tangible, of lasting and enduring value, when there's nothing else to be had, when the stock market is collapsing and the real estate market and the bond market, and there's nowhere else, and then they come to realize, as many people are these days, that the purchasing power of their dollars are being just drained out through inflation and overprinting, that there's nowhere else to run to, and the massive potential for real human suffering and real destruction of people's lives and livelihoods and their families' futures is on a scale that I'm not sure we've ever seen before in the modern era, and that's my greatest concern. You know that was the roots of our channel, Reluctant Preppers, with helping people to be aware and prepared to take care of their families on different eventualities that might come, natural disasters or any kind of thing, and it emerged. This kept emerging, pushing itself to the front of everybody's concern. Who was tuned into that channel, which is a very small fraction of even the 0.5%, and that's this coming financial stress. And many of the analysts we've had on have talked about this will make the so-called Great Depression of the 1930s look like a cakewalk if this grinds on potentially for a decade or more, perhaps 2 decades, like the Japan recession has been, and losing, perhaps 80% or more value from the stock markets, and who knows how much. Alistair McLeod keeps talking to us about the complete collapse of fiat currencies, just the end of the dollar and the euro, the yen, et cetera, just going away and having to be completely replaced.
Well, that's what I've been saying for the last 2 years also, in that I think the BRICS nations are going to challenge the dollar for world reserve. They just came out and publicly said that 2 weeks ago. They're going to issue a new world reserve currency. When you add all of these countries into that equation, it's 90% of human population. I think it's going to happen. But let's talk about it. Let's just take that out of the equation for a minute. One of my favorite analysts is Zoltan Pozsar. He's the former New York Fed repo market expert. He's been very right on a lot of his calls. And he's talking about an East-West dichotomy, similar to what I've been talking about, similar to what Alistair is talking about, where the West was the demand and the East was the supply. And this East-West relationship is breaking down, according to Zoltan. And he thinks that, when we talk about the inflation, you had all of this money created and unproductivity created at the same time, where everyone was locked down and paid money to be locked down. So it created more money chasing fewer goods. That's price inflation. And he's talking about the fact that basically what needs to be done, and he came out and said, I couldn't believe he said it. He said that the Fed will have to raise rates to 5 or 6% and keep them there for years in order to curb inflation. And to your point, even at the cost of an economic depression. And basically what he's saying is that as the supply is cut off from the East, that you end up with a situation where you have the only way to curb inflation is to keep rates high enough to bring demand down, to bring price inflation down. And he's openly saying that the only way to do this is to raise rates high enough for an extended period of time. Like you said, in Japan, when I started in this industry in 1990, the Nikkei was 40,000, and they owned Rockefeller Center and Pebble Beach Golf Course and casinos in Vegas and ski resorts in Colorado, and anything with an engine or a motherboard they made better. And here we are today, after 30 years of their interest rates being at or near zero. They're not even 2/3 or roughly 3/4 of the way back to there. I think they're at 28,000 or something like that today, somewhere in that neighborhood, 40,000 being the peak. It hasn't come back in 3 decades. And that's with suppressing interest rates artificially. So what Zoltan is talking about is raising interest rates enough to put us into a depression, to curb demand, to bring price inflation down. I mean, that's coming from a guy who worked for the New York Fed. So whether it's done by the Fed intentionally, or it's done by the rest of the world, de-dollarizing, moving away from the dollar, as I surmise is a greater likelihood, either way, it's either inflation or depression. Take your pick. That's what Fed Chairman Powell has to deal with. And, every government since Roman times has chosen inflation over the tough decisions. And I wonder, will this be anything different? This is why I have always felt that this will come organically from the East as they move away from the dollar, as they continue. Look, we talked about the other day, you have the Russians, the central bank talking about a new gold price hub in Moscow for the Eurasian continent, for all of the BRICS nations, as they put it, to break the manipulation of the Western COMEX and London Metals Exchange. They know it's coming. Heck, in 2004 or 5, there was a GATA put on a conference in the Yukon, and Putin had sent one of his economic advisors to the conference, the GATA conference. They've known about the Western manipulation forever, but the countries who have been accumulating all the gold, they don't care when the price is suppressed. They end up being able to accumulate it at subsidized prices, but that's changing. These countries are now accelerating their desire to de-dollarize. They've massively produced and accumulated gold over the last several decades. They're continuing to do so. Now they want it priced fairly, where you can't have 55 million ounces on the price-setting mechanism when you mine almost 1 billion ounces a year. How can that be? How can you trade 100 or 1,000 times more silver and gold than there is on the exchange when it's not backed by anything? It's rehypothecated. This is a scam, and the world knows it, and I think we are getting to that point rapidly. So whether it be by the Fed getting tough on inflation, as Zoltan Pozar says, raising interest rates to 5 or 6%, or more appropriately, letting the market set the rates, not the Fed. When that happens, then you can really have price discovery. But that's a religious experience when it does happen. And to your point, most people, I talked to a financial advisor today, a guy who's been on Wall Street forever, and I gave him my thesis. I think I frightened him. And he kept saying, yeah, but, and I had an answer for everyone. And at the end, he said, you got me. I can't poke holes in it. But these are guys. This is a guy that's been a financial advisor, traded on Wall Street, a huge career, and doesn't own an ounce of gold and silver. The public has not an idea of what is coming, and they think that everything will be made to, soft landing, and everything will be okay the way that it always has. But if we lose the petrodollar status, if we see Saudi Arabia join the BRICS nations, like it seems like they're going to, if we see them open up oil purchases and other currencies, all of this like that, it vaporizes the Fed as a sideshow. But I will simply say this, even if I'm wrong about all of that, you get a guy like Zoltan Pozar says the only way to curb this inflation is to keep interest rates for years above 5 or 6%, even at the cost of an economic depression, not just a recession, a depression. That's the only way to bring it under control. So I find it to be very concerning. And maybe the big money is starting to realize this. The people closest to the information is starting to realize this is what you have to do.
Even as bad or worse than an economic depression, the effects of that 5 or 6% inflation over a period of years, if you look at our $30 trillion national debt and then imagine what that's going to do to mom and pop of America and their obligations and their children's and their grandchildren's obligations to this unpayable just servitude in perpetuity. Basically, there's no way to, on a micro scale, this has been something for years. People talked about, getting out from under the crushing burden of debt and then getting some debt relief or something. Or people talking about getting out of their college and graduate and whatever special schooling they might have had for doctors or whatever, and having crushing student loan debt that they just can't get out from underneath of. Well, this is basically everybody being under that crushing debt. And it's not just the U.S. either.
No, and like this money manager said to me today, so I put, the U.S. has the strongest economy in the world. I said, really? Does it? I said, take the $9 trillion that the Fed has created in the last couple of years and ask yourself, is that true? And better yet, go back to 2008 at the end of the great financial crisis when the Fed had a balance sheet of $800 billion that's now $9 trillion. Take all of that out of the equation. Do we really have a stable economy? The stable economy has been fostered by manipulated interest rates. The manipulation in everything centers around interest rates. Now, Chris Powell says there are no free markets, just manipulations. The head of GATA, who we all owe a debt of gratitude to, Chris Powell, Bill Murphy, the head of GATA, the Gold Antitrust Action Committee. But, it's just a scam, because if you pull the $9 trillion of interest rate sensitive investments, mortgage-backed securities and government treasuries out of the equation, where are interest rates? They're way higher, 9, 10%. What does the stock market look like at 10%? What does the housing look like at 10% interest rates with 18% mortgages? What is the bond market, where trillions of dollars of bonds were all sold at the lowest interest rates in human history? What happens to the infrastructure that all of these corporations have built under the assumption of low interest rates into the future? We don't have the strongest economy. It's an illusion fostered by manipulation of interest rates, where people feel rich, where hedge funds can borrow $1 billion at 1%, plow it into cryptocurrencies and stocks and real estate and bonds and make a fortune and make hundreds of millions of dollars, billions of dollars, pay off that loan with no problem, make huge bonuses, and create massive distortions and misallocations of resources and distortions in price. And I said to him, that's not true. It's an illusion, because we have the ability to do that as the world reserve currency. And this is what's pissing everyone off so badly. I would surmise that, look, we have lived well beyond our means largely by the good graces of our foreign creditors. That's disappearing. Over the past 7 months, the Chinese have sold over $120 billion in our treasuries. 7 months in a row they've been selling. And they're doing so because they don't want to be under the thumb of the West. If they really do want to go and do something about Taiwan, they don't want to be sanctioned and have their assets frozen. Why would they ever buy our treasuries again? Who's buying our treasuries? Who's keeping interest rates low? Do we really think it's the Cayman Islands buying as much as they say they are, or is it a shell corporation owned by the Fed doing it? I don't know. It doesn't seem logical to me why anyone would buy a 10-year treasury, or even yet a 30-year treasury at 3% on a 30-year treasury, with inflation right now at 8.5%, which we all know is make-believe. Who in their right mind would do that? You already see the big market believes the big money bond traders believe the Fed's going to pivot by the inversion of the yield curve, where you get more money on a 2-year than you do on a 30-year. I mean, it's just ridiculous. Everything is askew because of the manipulation in interest rates, which has distorted everything. There is no price discovery any longer. And when we see that distortion and real price discovery happen, where interest rates are not set by a Federal Reserve but by the market, it's going to be a whole different story. And this is why the big money is pulling metal copiously off of all the exchanges. And this is why you see a coalition of countries away from the West. They're all de-dollarizing for this event. And if Saudi Arabia says, hey guys, thanks, we're now taking it in other currencies, and all those dollars dump, and the market then reacts to that with a plummeting dollar and skyrocketing interest rates and the Great Reset right at our footsteps, it's not going to matter what Jerome Powell does. And I think Jerome Powell understands this. Either that or they were complete idiots by weaponizing the dollar and kicking Russia out of SWIFT. It's intended, in my opinion. They intended to do this because we can never pay off $130 trillion of debt as rates rise. It'll blow everything up. Even take out of the equation the $55 trillion unfunded liability in Social Security and the close to $50 trillion in Medicare, Medicaid, government military pensions. And just look at the $30 trillion alone. It's ridiculous. $300 billion in interest rate increase with every 1% increase in rates. That's why they can't get tough on inflation. And then what does it do to the people indebted here, where all variable rate debt goes to the moon and, excuse me, home prices collapse and 401ks collapse, what make people feel wealthy. That's when you have a revolt and people go out into the streets. And we're not there yet, but it wouldn't take much to get us there. I've never been more convinced of this. And when I see a guy like Alistair MacLeod, who is a hero of mine in economic sense, start to say we are seeing a fracturing of the world, East and West, it only makes me feel like, hey, maybe I haven't been wrong by saying these things. When you see Zoltan Pozsar saying the exact same things, that the relationship between the East and West is breaking down and what this means, you have the brightest minds in the world, much smarter than me, verifying and validating what I've been saying to you for over a year. And I'm no genius. I'm just following the breadcrumbs that are being left there. And all of the world, which represents almost 90% of human population, is moving away from the dollar slowly. And the linchpin to it all is OPEC. And with Saudi Arabia saying we're joining the BRICS nations, and the BRICS nations saying we're issuing a new world reserve currency, and gold being reclassified tier 1, you keep putting these things together and bang, what do you have? You have a problem on our hands. So I think the big money is waking up to this. And the big money, that the sophisticated money, I don't even know if I call them sophisticated. I just call them in the know. And they know the playbook. And that's why they're doing it before everyone else clamors to do it. They're doing it when everyone thinks they're idiots for doing so.
Well, there's a recent study that just came out that it's kind of like when they finally had a study that proved that the chicken soup was actually good for you, that moms have known all along. So the study just came out that said more people believe that there's a two-tier justice system. In other words, there's, a good enough for thee but not for me justice system in our country, but it applies not only to justice systems but to financial opportunities and protection as well. And the common sense response in an unjust class system like that is, don't listen to what they say, do what they do, follow what they do. And so for people who are trying, and Gregor Mannarino has exhorted us for years to try to become your own central bank and do what the big money is doing in your own small little way. So for mom and pop America who want to, and small business owners who want to do what the big those in the know who have the playbook are doing, you often provide a weekly special that makes it more possible for them to do that on a budget. Can you tell us what you've got available this week before we have to wrap up?
Yeah, we have, we're going to do something a little bit different this week. Again, we're sticking with silver because, look, I've said for a long time that I think ultimately the place to be is gold. Ultimately, the most sophisticated, well-funded, well-informed bank in the world would not have the BIS, would not have reclassified gold tier 1 if it wasn't for significant reasons. But when you look at silver right now at an almost 90-to-1 ratio, you're talking, it's only been here less than probably a fraction of a percent of human history. It's an anomaly in price, much like everything. So much of what has happened over the last few years is distortions in price discovery, anomalies in geologic and historical ratios and comparisons. And everything I've ever done in this industry that is successful centers around exploitation, first identification, and then exploitation of price anomalies. And so this is no different. So we're sticking with silver. It's still probably the most undervalued asset on the planet, maybe the very best, if not the value play of a generation. But ultimately, when the ratio snaps, we move you back to gold. I'm going to tell people now's the time to do it. Just like we saw in 2010 when it was 85-to-1, second time in human history, 8 months later, it was 37-to-1. Switching back into silver or into gold, rather, you would have made 2.5 times. That's kind of what my playbook is here. So, if I'm a quarterback in a huddle, I'm saying, here, you go heavy on silver right now. You go out and run your route. And when that ratio snaps back, we switch you. Now, in football parlance, balls get intercepted, fumbles happen, QBs get sacked, plays don't always work out. But that's where I'm going with this. Ultimately, I want people in gold, but the pathway into getting there is extraordinarily favoring silver. By the same token, if I'm also right in what will happen as rates rise, or Zoltan Pozar says, even at the expense of an economic depression, you need to have something to barter with. People always talk about gold and silver being great in inflation. But what happens if you have a massive depression and deflation where prices are collapsing? What gold and silver are, as Doug Casey has made famous statement, that they are assets that are not simultaneously someone else's liability. So they actually perform better in a deflation than in an inflation. And there was a report written by a guy, I think, named Roy Jastrom, who basically was a head of economics, maybe at Georgia or Alabama, and he wrote a report that basically said this, that in a depression or a deflation, gold and silver, because they are not someone else's liability, have no counterparty risk, are actually the best performing assets. As Richard Russell said, God rest his soul, in a depression or a deflation, he or she who loses least wins. And so you have to have something that will allow you that utility. And so not only are we going to do the 1 ounce silver coins, because I think, there's always room for more 1 ounce. And those are the Noah's Ark 2022 Noah's Ark coins. They're $4.25 over the price of silver. They're made by the Armenian government, but they are actually manufactured by the German Geiger Mint, probably the highest quality mint on the planet. Incredibly packaged in a wood box. They're really beautiful. They're beautiful coins, 2022s, and 4.25 right now for a 1 ounce sovereign mint coin is going to be way cheaper than just about anything you'll find anywhere online. But if you need to barter, we've often talked about or trade, and God forbid we do, but hey, reluctant preparation, why not have something? We've always talked about junk silver, pre-65 dimes and quarters, but it's arguably too expensive. And the one item that's always kind of bothered me about junk silver is that I've sold millions of dollars worth to people who have bags and bags and bags and bags of them in their safe, but couldn't tell you how much silver is in a dime or a quarter. And so having something that is easily defined and marked as quarter ounce or half ounce by a respected government is very cool. So what we have here, we also have the 2022 quarter ounce Noah's Ark coins, and they come in small boxes of quarter ounce coins, and those are $3.25 per coin over the price of silver, over their melt value. So in actuality, you're talking $13 an ounce over silver. They're expensive. All fractionals are expensive. Junk silver is expensive. We have also the half ounce Canadian eagle, bald eagle, and the half ounce Canadian polar bear. These are 4.9 fine pure silver coins made by maybe, in terms of sovereign mints, the 6 major mints, maybe the most respected, that being the Royal Canadian Mint. Those are $3.50 per coin, or $7 an ounce over the melt value, over the price of silver. Cheaper than junk silver, 4.9 fine, clearly marked 1/2 ounce, come in small mint boxes as well. So I think those come $2.40 to a box. Again, I'm not positive, but I'm almost certain 240 coins to a box, somewhere in that neighborhood. But these are all in stock, live, ready to go. And if things got bad enough, having utility, quarter ounce, half ounce, and even 1 ounce coins, silver is imperative. So following the theme that we've been doing for a very long time, we're still recommending silver because it is the pathway into more gold, because it is maybe the value play of a generation. But there will come a time when we will shed our recommendation for silver and focus more on gold, as the central banks are doing, and as the sovereign wealth funds are doing, as the commercial banks are doing. And I think as the tier 1 reclassification is pushing the sophisticated money into accumulation of gold before everyone else catches on to it. So with that in mind, I just want to put one last cap on this. The ratio between gold and silver's average for the last 200 years, roughly 42-1. Keith Neumeyer talks about it coming out of the ground at 7-1. It's priced at 90-1. Do you see the value play here? If it goes to its average of the last 200 years of 42-1, it's a double. You trade that silver into gold, and it would be like buying twice the amount of gold you could buy today, because it only takes 42 ounces of silver to buy 1 ounce of gold going back, rather than 90 ounces it would cost today. So it's playing that ratio. So I have a game plan with all of this. If the worst thing that happened was that you were stuck with silver, which, as they say, is the money of the people, gold is the money of the banks, so be it. So you have a little less convenience, but you're still doing what the biggest money in the world is doing, and that is sidestepping the moving semi truck that's barreling down the road at you that will squish you if rates rise. And this is a way for people to get out of that. And if it really got bad, like Zoltan Pozar says, where it's a depression, where everything is collapsing and people don't even want dollars, you'll have some utility in the form of brand new 2022 coins that are clearly marked, made by sovereign mints, that I think would be a wonderful way to trade if, God forbid, we had to.
Well, I share that sentiment with you, Andy. We try to prepare for the worst and hope for the best. That's why we're here as Liberty in Finance, formerly as Reluctant Preppers, trying to help people get prepared. And we're just grateful always for your role in that, because you bring us a view from the vistas that we don't know how to climb, and that you're teaching us again and again and again how to understand what's coming before others see it. And we're grateful for that, and always grateful for your presence here on Liberty in Finance.
I'm grateful for being here, Dunnigan. I'll continue to be here until the very end, and hopefully that's not for a very long time. But you stay well, and I will look forward, of course, as usual, to picking up where we left off with, I'm sure, some more interesting goings-ons. It seems to happen every week. There's something new to talk about. Never was the case. Now it's 2 or 3 important things. I'm sure it'll be no different next week. So to you and everyone else out there, thanks for letting me share a few minutes with you, and look forward to talking to you again next week.
Take care.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty in Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.